This is Just Ask George, exploring the universe of corporate finance and capital formation for your business enterprise, with merchant banker George Lovato Jr. and your host, David Wolf.
Hello, this is George Lovato Jr. with Just Ask George, and today we have a special version of Just Ask George. BH Capital has launched a new and innovative financing product exclusively designed for the automotive industry. It is designed for dealers to refinance their real estate. Normally you see Dave Wolf, my wingman on Just Ask George, sitting in this chair. But today we have a very special guest, Ken Zangara, a longstanding friend of mine for 30 years here in the studio. How you doing, Ken?
I'm doing great, George. Thanks for having me on this afternoon.
You bet. We're having some fun today.
That's right.
We've had some technical difficulties, but we're all together now. So let's talk a little bit about this new financing product and sort of talk a little bit about the marketplace, if you wouldn't mind, and telling us what the challenges are that a dealer faces today in the world of finance.
Yes, thank you, George. Well, you know what's surprising, after 2008 and the meltdown the industry had during that year, things have come back strong, but surprisingly enough, there aren't a lot of banks, big banks, small banks, or even the manufacturer captive finance companies that are real anxious to refinance dealership real estate. And that's
They've sort of left the marketplace after 2008.
That's right, and hadn't come back like the rest of the industry has.
Right. When you had your stores, you had a lot of factory financing. Is that still the case today, or is that even changing?
No, I think that the factory does have a large portion of the dealership real estate portfolio, but some of the other big banks, nationwide banks, have really pulled back, as they have in a lot of lending, quite frankly. And there's a need out there in the marketplace for dealerships that want to refinance, want a better situation on their mortgages right now, or they want to sell out. Now's a great opportunity to do that, and there's not a lot of financial institutions out there. And
we talked about this, and this is going back a couple months back, and I had said, I'm still seeing responses and inquiries from dealers wanting financing, and you had thought that maybe the marketplace had radically changed since 2008, and that the banks have pulled out, the insurance companies have pulled out, the specialized managed products, managed funds have pulled out, and so it really was causing this shrinking market of availability for dealers. How many, as a percentage, do you think of the entire marketplace are faced with the problem of refinancing their dealership today?
I don't know exactly what the percentage is, but it's evidently extremely high from the response we've gotten so far.
Yeah, talk about that response a little bit.
Well, we've had over 2,000 responses so far. Out of that's over 10% of the information that we sent out there. Over 2,000 have responded that they are interested in a product to refinance their dealership real estate, which I would say that a large percentage of dealers right now are facing a call on their real estate or just want to redo it and get away from their present financial provider for various reasons, George.
In terms of the type of client that we're looking for this product, you want to talk a little bit about that and what it takes to qualify?
Yes, of course, the dealership needs to be profitable and all the departments, needs to cash flow. The dealer needs to have good credit, and the dealership needs to have good credit. And we can help them prepare a pro forma and evaluate the real estate. We can even help them with the real estate appraisals and take the loan package and the application process all the way to the funding stage.
Right. In terms of the value of real estate out there, the appraised value of real estate, has it changed a lot in the past 10 years? Have dealerships added value to these assets? Have they been forced to add value to them?
I think many of the manufacturers, both domestic and import manufacturers, have required upgrading of the facilities, standardizing the facilities, and making them look better. And many dealers have done that. I'd say probably 70 to 80%. Some are still holding back, but they're still facing pressure from the manufacturers to upgrade those facilities. And that might be a reason why they're trying to refinance their real estate right now, to pull out some capital to make some improvements.
Make improvements to
which
the
we can
dealership.
help them with.
Exactly. In our system, we talk quite a bit about how it is we create the underwriting package. We assist them with the appraisal. We actually do the valuation. You'll go in and look at the metrics, the financial metrics of the dealership. But in terms of the real estate itself, when we look at these values today, you had said that a lot of these stores are doing better. And so as far as an enhancement to the value of the real estate, what are the other factors that affect it? Market? You even talked about product, I think, at one point in time. What are some of the other factors that can enhance the value of that real estate?
Well, of course, dealership profitability. I think a surprising factor that people don't take in consideration is the database of the dealership, how well connected they are to their customer database, and how they're communicating with them, how loyal they are, what kind of repeat buyers do they have, and owner loyalty. The brand, of course, is
the brand. Yeah. Can that definitely influence the value of real estate?
I think so. Appraisers don't like to admit it, but obviously they take that into account. You're going to have
appraisers appraise, but when it comes to refinancing, it's the bankers that really matter, right?
That's right, and the bankers seem to have some influence on that appraisal.
Yeah. And of course, we're not supposed to, but when we're talking to these dealers, what seems to be the resounding response from them? Are they looking for more an interest rate based loan, or do they just want more flexibility, or do they want? What do you think these percentages are that? Where they want different elements out of that loan?
Well, I think that mostly the most important consideration, far greater than interest rate, is stability. So many of the financial institutions that they're with currently have a short call. They're on a short fuse, and they're concerned that right now, business is great.
Right.
A lot of dealers are making money in spite of themselves. So they're worried about that next downturn. What's the bank going to say?
Right.
Are they going to turn again the way they did in 2008 and call the note and so forth? And that's what we're trying to do.
We saw a lot of those guys back then, didn't we?
Yeah.
There are quite a few of them.
That's right.
One of the things we've designed into the product is that we've said, with the less equity that you have and the thinner the metrics are, profitability, credit strength, cash flow, so on and so forth, then the rate's going to grow. But the healthier your dealership is and the better those metrics are, the lower the interest rate. So in your opinion right now in the marketplace, where do you think a lot of these dealerships are? You're saying that in spite of themselves, some of them may be making money, but overall, what's the strength and health of the industry in your opinion?
I think it's good. It's better than it's been in many, many years. It's just like we've all retailed a lot of cars. The credit for a customer fluctuates on their credit background and their strength and their down payment and their equity. And the same thing applies when you buy when you're getting a real estate mortgage,
right.
Particularly dealership real estate mortgage, because it's a typically unstable situation. Lee Iacocca used to say that you could expect a downturn every 10 years.
Every 10 years.
Yes, and I think he might be 8 to 12 years. But you can expect another downturn. So if you're sitting in a situation right now with an unstable condition on your real estate mortgage,
right.
It's a perfect time to redo it.
Perfect time to redo it. Well, listen, we'd like you to visit bhcapitalltd.com and take a look at the pages exclusively designed for you and the auto industry, and look at the program we've designed. It is designed exclusively for auto dealers, and as we stated, the interest rate is commensurate with the health and metrics of your dealership. The better shape you're in, the lower the interest rate you'll get. And that's a big part of the flexibility of the product. But we had Ken on today. I think this was great having you here and having the Mr. Goodwrench of the auto industry, being able to answer all these questions and help clarify this for our viewing audience out there.
And remember, we have the Mr. Goodwrench of the banking industry, George Lovato Jr. here with BH Capital.
Well, listen, thanks, pal. Good to have you aboard. And out there, please visit bhcapitalltd.com. Look forward to seeing you again. Bye-bye.
For more information about George Lovato Jr. and BH Capital, visit bhcapitalltd.com. Check out more episodes of Just Ask George at justaskgeorgeradio.com. Just Ask George is produced by Steve Garth and is a production of BH Capital Ltd. All rights reserved.